part of the definition. Looking forward to the Kenya Pipeline initial public offering. There's an opportunity for partnership with stakeholders. And one key one is you, the potential shareholder, the Kenyan. And you would be asking, as I look to invest, who is KPC and what is their plan? And someone who understands the plan, or at least has the blueprint of Kenya Pipeline Company, is Zilper Abong'o. She is in charge of strategy and commercial services. And thank you for speaking to us today. But one thing that someone hears when they hear strategy is mnatupanga. So in the description of your role, mnatupanga ama mnajipanga as you prepare yourself. How does it translate in your role at KPC?
Thank you so much, Mark. Tunapanga kila mtu.
Okay. Yes.
So strategy is a function indeed of planning, but it's also a function of envisioning.
Yeah.
And unfortunately or fortunately, that requires that all stakeholders are included in a thought process.
Yeah.
So we will think about our consumer
Mm.
of products and of services. We'll think about our customer, which is the B2B clients that we handle, who are the all companies that then eventually get products to the end user. We will think about our various stakeholders and partners, such as the National Treasury,
Yeah.
our board. We have a lot of interfaces with various arms of government, from the standards authorities. We have the ports authorities, we have Kenya Revenue Authority, and therefore you have to plan. For you to have a seamless operation like we have had for the past 52 years, it requires that you plan them and you plan yourself internally. So my role, and specifically the role of this function in this company, is to look into what are our current operations,
Yeah.
what is it that they need day to day, because you will need to resource them and therefore collaborate with other functions within the company, such as finance, operations themselves, engineering, whatnot, as well as what then could it look like tomorrow, next year, and in another 10 to 20 years' time, because the kind of investments that we make in this organization are very huge and very long term, and also extremely, extremely critical to the operations of the day-to-day activities in manufacturing, in transport, i.e. your mobility, for you to move from your house to your office area, and also in terms of our ability as an economy to grow, because we do handle a function of the energy mix that is very critical to human traffic and human mobility movement. And that has to happen fluidly. So if you do not plan, then you will end up in a situation like some of our African country sisters and brothers have gotten into, where you have a resource and you still are short of it, even when it comes to end use, access. And therefore, when we talk about strategy in KPC's context, we're looking at, we currently have one primary line of business, which is transportation of oil and gas clean products, that is petrol, as you call it, for fueling your cars. And then we have diesel as well for manufacturing, for running your tractor, for the plants that produce goods, as well as jet fuel, which then helps to have the aeroplanes in the sky and run our tourism sector. But we also have other lines that are usually unseen and that are also growing.
Right.
And therefore, that mix of how the revenues come in, how the operations run, how the human beings interface, as well as eventually how our stakeholders interact with the services and the forward thinking that we are working on, have to intersect. And that is the role of this function.
With the IPO that's coming up, privatization phase, does it disrupt the plans that you had from your strategic point of view? Are you going back to the drawing board? Where are you now in that, in making sure that things align?
Very solid question. I think around about probably 5 years ago, And even before that, in the Kibaki regime, I think it goes all the way back to the noughties, the early 2000s, there was a desire to have certain state corporations that function as utility companies or providers such as, Kenya Power, KenGen, KPC, the telecom company, Kenya Airways, eventually divested because there was a feeling that governments are not as agile when it comes to decision making, as well as possibly the kind of investment quantum that's required to keep these utilities running as they should, as efficiently as they should. So it's been a conversation that's been in the public domain for pretty much 20 years now, and probably even longer, because I'm sure there was preconception behind it even before the noughties. And about 5 years ago, it gained more momentum again. So I know in the previous regime there was an attempt, but it was shot down in parliament, and therefore in the build-up post the last election, there was a desire, I believe, as part of the strategic thinking of our government, that certain utilities, considering the role that they serve as well as their capability, should then be offloaded into into the investment market that would allow for scale, because ultimately we currently are operating as a regional provider. We call ourselves the artery into the Great Lakes region because of our neighboring countries, and I'll speak to that a bit later on, depending on us. But we needed to grow into a continental company. That really was the vision, to compete at the level of some of our comparators in Canada, in Malaysia, like Petronas, Petrobras in Brazil, as well as some of our other Transnet in South Africa and whatnot. And therefore, it was felt that the only way to do that, to achieve scale, to achieve it relatively quickly, and to achieve it to the kind of quantum that the vision that we had then of Africa's premier oil and gas company could happen, was through a divestiture. So this has been a long time coming, and part of our strategic conversations between our management, our board, and our shareholder, who's the National Treasury.
It's been in the pipeline,
Correct.
pun intended.
Yes.
A critical question is what changes in terms of operations, and it's come in the form of even fears within internally and with other stakeholders that it might change the provision of services with KPC. That is the journey to privatization. What do you see strategically having to change or tweaked to align to the privatization?
Privatization, divestiture, was actually a strategic thrust for this company, because what we wanted to achieve, as I said, was two things: scale and large capital investment that would get us to a grand continental reach. And therefore, there's no way you can do that if you keep depending on the business as is model, because it had sort of, in our projections, was going to plateau, getting towards the 2030 mark, in which case would have had an investment that's been around for 52 years and then cannot add any more value to both the Mwananchi, who is the key shareholder here, as well as even the employees that are the driving force behind it. And therefore, when we are going to the market to fetch capital for the organization and to fetch new investment for the organization, it's one, to improve on the quality of thought, such that then where there are gaps possibly in our financial modeling, in our possible operational methodology or philosophy, they can be plugged and towards the eventual goal, which is what? Expansion. Because KPC has to remain a critical infrastructure for this country as well as the region, at least for the next 50 years, because we see that the fossil fuel business will not ebb as quickly as was initially projected. And though we are aiming to climate-proof our businesses, it will remain a key source of mobility, especially on the African continent. And therefore, we had to focus on what can we do with what we have, but then get it to a level where even as we work on different modes of energy for our continent, it will be at a pace as what they call a just transition, at a pace that is fair, at a pace that is affordable, and at a pace that is secure.
Yeah.
So coming back to what is it that changes, what doesn't change, as I alluded to initially, we are not just an enterprise for Kenya, but we operate for the regional economy. Uganda, Rwanda, Congo, DRC, that is, as well as Burundi. There's been some parts of Tanzania before, as well as some parts of Somalia, even as well as Chad and Central African Republic. There initially also was some products going into Ethiopia and South Sudan. And now, even as far as North Sudan into Khartoum, take product from the port of Mombasa. So this being a very critical entrepot for the African continent, it behooves KPC to comport itself like a continental asset. And therefore, where we had reached in terms of capacity, the pipeline investments that we had made, as well as the tank installations that you can see around us, had reached sort of their peak, and therefore needed more aggressive investment for them to keep living up to the demand, because we are seeing at the regional level, some of our neighbors are growing at a rate of like 8%, an average of about 5 to 6% year on year, which means the consumption of petroleum products for mobility, as I indicated, for production and farming is increasing. And with some of our partner countries being landlocked, such as Uganda and Rwanda, but being land linked into potential future markets, then we had to figure out how do we eventually take into account what they need, as well as these new markets and where they will be. And therefore, investment is very critical. And we cannot then keep expecting the Kenyan Mwananchi to also feed in to what the regional players need. So they now also need to be part of the growth and contribution of this pipeline infrastructure for the future and posterity. And looking at our operations now, they can proceed as is for about 3-4 more years without major changes. But beyond that, now we'll start getting into an era of shortages if we do not invest. So when we're looking at investment into this infrastructure, it's so that it's fluid, it's so that it is seamless going into the next 25-year horizon. And therefore, we're looking at any investor that looks towards an enterprise that will be here for the long term, like an anchor sort of strategic investment into the energy sector, that this would be it. Because looking at the downstream oil and gas sector, that's anything that then moves after it's refined and got into the ports. It's mainly KPC that's playing in that market, because our national oil company that was distributing, even though it has had its problems, even if revived, we would still need some sort of feeder into it. And KPC provides that logistical, infrastructural, as well as distribution network into that sort of system.
So what I hear is the IPO, the privatization, is finding KPC in motion.
Correct.
We're not waiting on it.
Correct.
To kickstart anything. So it's catalytic. It's going to be joined in your plan moving forward.
Absolutely.
Which is where we ask and call it a pitch to the shareholder or whoever is looking in keenly. What's your plan?
Perfect. We actually just commissioned our next era strategic plan. Our last one lapsed in 2025. And so looking at the next 5-year horizon, we have diversification as our agenda. As I mentioned, our main category of revenue comes currently from pipeline throughput. That's what the volume of products, clean products that moves through our system. And it cannot continue to be our sole dependency. So we have laid the foundation for about 20% of our next generation revenue to come from other sources. And that will include, as you may or may not have had, optical fiber infrastructure, because with every pipeline that we lay, we always have an optical fiber plant. So there's cables that run all across the country, and we then provide the backbone for some of the major telcos in the industry that you use for telephony, such as Safaricom, Airtel, that you also use for internet, the same companies as well as the Wananchi Group, JTL, and the like. And we're looking to ensure that even internet becomes accessible to you as part of the government's digital superhighway strategy that then will include also other utilities. We're seeing as in scale that kind of operation growing to about 1 billion shillings in the next 2 years post commissioning of the equipment. And beyond that, it will be infinite, the level of growth that it can get to, because we're also looking to go into the regional market with it. We're also looking at expanding very significantly into liquefied petroleum gas. Our president has spoken to this significantly and repeatedly over a period of the last 3 years, and he would want to make it accessible but also affordable. So we, being key backbone infrastructure providers with a lot of land assets in Changamwe, in Mombasa, we're expecting that we will be able to support private investors to put up storage there that then will facilitate distribution into the inland markets as well as into the regional economy. We are also looking at very much scaling up our educational facilities, because we have a Morindat Institute of Oil and Gas that caters to learning and upskilling within the regional economy. It's one of the centers of excellence that was commissioned by the heads of state of the East African community in 2014. And it's gotten so far accreditation as a polytechnic, a national polytechnic, and it offers international level courses in welding, in energy and operations, as well as even in optical fiber distribution. Ultimately, we also have other diversified portfolios relating to investments of the monies that we generate that are reinvested into the financial markets. And there's a whole host of activities that are also going on in relation to our existing or nascent infrastructure that will lead to more business in terms of storage. So there's something we're calling the trading hub, which is our vision. And this is something I hold very dear, and one of the things that I felt needed to happen when I joined the public sector from the private sector. I was an oil trader, that Kenya could become a hub for Eastern Africa, considering our access to the port. If we just set up more tank facilities, we could actually then become a price discovery zone, so that we don't just become a price taking sort of economy, we are also a price making economy, akin to what is available in the Arab Gulf as well as in Singapore, in other parts of Asia, the Mediterranean, and other parts of Europe and the Americas. So we are estimating that with the right investment, because our land assets in the coastal region are very vast, as well as in segregated parts of our country, that we could actually have capability to supply pretty much all of the Great Lakes region, but it will require this quantum of investment for it to happen. And eventually, data centers are a very significant core of future business in tech. And with the land assets we have, we're also looking to set up a data center either at the coast or in Kisumu, that would then facilitate us as a gateway for landed cables, which we already are, but now we could actually scale it up to then redistribute data traffic into the islands as well as other parts of Africa, going further south. And then also, if we look at the Kisumu zone going further in to into the Eastern and Central African region. So looking at it holistically, we're expanding in all directions. So we're at the coast, we're towards the lake, we're going further down, we're going aerially, because we also are setting up infrastructure that will enable satellite providers to interlink us. And we have, in conjunction with the LAPSET Authority, are also working eventually to be equity or operational partners in the Lokichar-Lamu corridor. So there's some crude oil that's to be re-exported from the port of Mombasa, but there's also the capability to develop the bathing facilities in Lamu, as well as transshipment capability from there into the Horn of Africa, speaking of Ethiopia and Sudan, as well as Eritrea.
And I mean, as you've said, diversification, diversification, diversification. That's what I hear as you talk about what your plan is. But for an investor, or at least a stakeholder who's looking in, are you spreading yourself thin? Yes, there is investment coming in, capital that's coming in through the privatization, but will you miss out on your core business? And that being a worry point or concern point for the investor who says, what's is there is working. So why are we trying to
An excellent question. That's something that I always say, that if we did not diversify and if we did not divest, we would likely end up missing out on our core business, because we are too focused on running this one ship, which is growing to its near plateau level, and therefore also competing with resources amongst the Kenyan economy to keep itself running. So relying only on the transportation, storage and loading infrastructure that we have will get Kenya Pipeline Company, as well as the Kenyan economy, to a point of, I would say, diminishing returns. Because in terms of sweating of assets, amortization of the same, we have done that. Now, what we need is, as I mentioned, scale. If you get scale, you're able to retain your optimization, but also access new markets. Because what we need is for us, like what infrastructure we have been planning to expand it modularly. So in the next 3 years, we have a plan for assets in the eastern side of the country, where our main distribution infrastructure comes from Mombasa to Nairobi. We have expanded significantly in Nairobi, and then we're also then looking to expand western-wise to expand the pipeline loop, we call it network, going into the tankage that side, as well as the tank capability in that area, so that it can be able to take more. So I'm sure you've heard that we are in talks with the Ugandan government, as well as eventually the Rwandan and Congolese governments, to expand our pipeline infrastructure in that direction for white oil distribution. And we aim to do that through these sort of investments that we have already, they're actually in motion. They're already funded. There's contractors that are already on site that have worked and concluded some works, and others are scheduled to be concluded in the next 24 months. So there's no way that the existing infrastructure can coexist without the expansion, because they're working in tandem. And ultimately, even in terms of greening our systems and whatnot, we're working with new technology, but we're also, for instance, as I said, in this Nairobi facility that we sit on, we want to run our pumps on solar energy, because we realize that ultimately we will have to also reduce our codependence on thermal fuel. So we're working on future-proofing this business such that it's able to sustain the niche that it currently facilitates, as well as organize the future in a way that we are tapping into that niche through other ventures and new markets, but also enabling a sustainable future wherein we don't just over-rely on fossil fuels.
So, looking at the scenarios in the lead up to the IPO, and there's a good response from the market, call it even oversubscription. As you answer this, and in finality, are you ready for growth? And you've spoken to it a bit in your plan. What would then spell success? And what are you looking out for as head of strategy for KPC through this transition into privatization?
Of course, as an investor, you're looking at your bottom line. We have planned for a revenue future that is pretty much double what it is that we are currently making, at about 40 billion shillings mark in the next 5 years, with these investments lined up. We are also looking at a profitability ratio that's about 2 times higher than what it is we currently have. So we are working on ensuring that for every coin you invest, your return is as maximal as possible. And that's why investment is only being done in a timed manner, so when needed, but also in the right locations. So it's a very well thought out end-to-end strategy that does not just invest for the sake of investing, but invest towards a certain horizon. And ultimately, we are aiming at, after this privatization is done and we now go into full throttle implementation of our strategic vision, which, as I said, will run for the next 5 years, we will have set up our various revenue streams. We will be able to return dividends even twice as high as we have been to our shareholders, at least within the next 5 years. So beyond that, it's good. Now the investments will be at play, and you will be able to sweat your capital as even higher return than initially employed. And then we will also be able to sustainably be entrenched in the regional economy. So success to me, beyond the money, is for Kenya to be the center of operations for oil and gas, optical fiber distribution, liquefied natural gas production, as well as technology solutions in the energy spectrum for a diverse range of clientele. So we're looking at companies, we're looking at countries, we're looking at wananchi, we're looking at innovators, we're looking at hubs, and we're looking at educational institutions. So we're looking at expanding in all dimensions that would enable us be the landing point for all oil and gas companies and energy companies in the region. And that's why with this strategy, we're calling ourselves Africa's premier energy partner, because as you mentioned as we were beginning this, we are looking to partner, to collaborate, so that what already exists, we just build on. What is new and niche, we actually help to scale up. And we are aiming that we will do this through solutions that are sustainable, because ultimately for an investor, you do not want to put your coin where it will not be valuable to you in the next 10 to 20 years. So since KPC has remained a profit-making entity for 52 years, we're aiming to ensure that your investment is secured for the next 50.
I don't know about you, but I'm sold.
Oh, really? That's good to know. That's good to know.
So
this is a solid asset.
Yes. For that one person who wants to sit this out first and watch, what's your last word to them in terms of assurance? Even without you being the head of strategy, just watching it as someone who's been in the private sector as well. What's your last word to that person?
I would say buy early. We have been working on this strategic expansion, as I mentioned, at least for the last 5 years, preparing, studying the international spectrum and where we play in the energy space very keenly. And every number we have has been backed up by research. And where more research needs to be done, we are in the process of doing it in the next 2 to 3 years, such that if you want to invest after 5 years, it may be a little bit too inhibitive for you to actually enter access the market, because currently KPC has enterprises like KPC have very high barriers of entry because of the capital level that's required. So now that we're pulling together as a mass public, it is the best time to invest, because later on dynamics could shift and we could end up, wanting to scale in terms of equity investment and not mass investment. And at that point, you may not be able to mobilize enough to actually own a piece of the company. So considering that a lot of work is already in motion, there is no risk. It's a safe investment for you in the short term if you're a short-term investor. In the medium term, you can flip it. It will have made money for you. But in the long term, if you're a long-term institutional or corporate or national investor, you have to be in this pipeline, because ultimately your future depends on it.
Well, I couldn't have said it better. Zilper Abong'o, thank you for your time. And as you've heard it from her, buy early. In other words, mapema ndio best.